to Insights. I'm Eric. Thanks for stopping by today. We're going to talk about the dollar index quickly in an open review, just to lay down some of the things that you might not be catching otherwise. And if you're not involved with the dollar index report, well, I beg people to get involved with it in 2021 because I said 2022, and this is not something that we laid out there because of what we're seeing now. We said it was probably going to be the most important, and we're seeing that now. I don't think this is going to go away. We're going to talk about some of the things that we discuss inside the report just briefly. We're going to talk about some of these cycles here and what this means, but I don't want people to underestimate what can take place and where we're headed, and also what is taking place outside the theoretical world of money in terms of the discussion of these fractal trends. What are we seeing in the real world, and what that really means for the dollar itself and for everyone who's using it or outside of it. If you're not using the dollar, you're using it indirectly because it's the dollar strength that's causing pressure in a lot of the periphery economies that is collapsing them. Eventually, the invisible hand will come for the dollar, but not until it takes out most of the periphery currencies. And when you say take them out, it's going to devalue them aggressively, and in some will disappear. They just cannot survive. Another aspect of this will be as many of the currencies that are pegged to the dollar, they're going to break those, and no peg ever lasts. That's the easiest short trade on the planet, is to short a peg. Eventually they'll blame the speculators, but this is truly all capital flows, and this is all the invisible hand that's moving this around. Let's take a quick look at the, and this is updated through past this Friday, not even through today, which we have continuation of these trends. The evolution of the trade studies 3 time frames, daily, weekly, and monthly. You can see the price cycle for all of these are pretty well extended, which normally would raise a lot of red flags. You can see the composite trend here, which is a function of all 3 of these trends, and all the cycles is 1.57. That's pretty high. Usually doesn't get much past 2 when it really moves. One of the reasons it's being held back is the time cycles here are not that extended. Most notably, the time cycle in the primary trend is only 13 months. You can't see it, but it's 13 months if I move that circle out. And that creates a time score below 0. So this is an early cycle. This could extend out into 2024, and if it does that, it is going to put people down. Put people down in ways, I mean, I'm not going to talk about potential solutions or what you're going to expect when you see some of this. We're going to save that for the report. If you think the dollar doesn't matter, and if you think it doesn't matter for whatever you're producing or doing or living or getting paid in, I have to say that it is going to. It's only a matter of time before it comes knocking at your front door. Normally, when we look at the evolution of the trade, we'd be worried about these price cycles, but I would caution against judging to anything. I see people trading in and out of this trend short term. This is why we carry the primary core position in the evolution of the trade to protect ourselves against that. This is going to be held, this trade in general, when we talk about this, and we'll finish this out in the report, and I encourage all people to consider that. We'll leave the link for that report inside this video, or actually inside the post for all this, and inside underneath the video. I'd search it down. I mean, before, it just depends on where you want to live when, and how you want to live when this is all settles out. If you think this is going to be taken care of by the Fed or the Japanese central bank or European central bank, Bank of England, whatever, Bank of Australia, central banks in general, if you think they're going to take care of this, you have no idea how the invisible hand operates. The invisible hand is not controlled by central banks. It is the function of individuals, unless you suppress freedom and tell them that they have no more choices, which I trust that may be an option. People are going to do what they're going to do to protect themselves, and they're going to push these trends to completion. Completion will be the end, and the end of many of the currencies that exist today. And to the dollar, it won't last forever. The rally won't be infinite, and it's not going to be an infinite safe haven. Eventually, they'll come after the dollar too, so everyone here that's even in the United States has to be prepared. So the point with this is not to trade in and out of this so much. If you think this is a trading exercise, you're going to be left watching on the sidelines at some point, because it's not going to allow you an entry back in. Panic declines, waterfall declines, panic buys. This is an index of major currencies. It can go vertical, and then once it does, you'll recognize some of that stuff, and once it rolls over, you'll start to back away. At some point, you want to release the dollars. It has to do more with time than it is price. Price is a big component of it, but time will be driving that as well. But I caution about trying to trade in and out. This was the short-term coil that we talked about just being broken. We're already achieving 1 and 2 targets from that. There is a bigger coil here from 29.2 down to 27.98. That generates 1, 2, 3 targets as well. I suggest going and look at the report to see where those lie. You're probably going to get to the second target, and then you're going to get to the maybe even the third, and then it's going to really start to slow down. The bigger the coil that's in play, the more difficult it is to traverse those reversals or the targets that are generated from them. So you don't want to get too greedy, and you don't want to get so optimistic that you can't see how supply and demand in the real world operates. But to suggest that this little breakout here and everyone stands to the sidelines, well, everyone's already paying the price for that after a couple days ago, which I remember distinctly suggesting that people not rush out the front door and sit and ride some of these things and ride the cycle of time. Cycle of time is not extended. You can find the cycle of time inside your matrix, inside the primary trend, the lead M tab, and you can see where the cycles exist. The bullish tabs are here. In general, there's been 15 tabs since 1985, and we're going to talk about the limitation of what the computer sees through 1985. They average 14 months, and they can go as high as 38. The minimum impulse is usually 5. If you're sitting there betting that the upside breakout was false, there's been 0 of them since 1985. This is what I warn people when the dollar started to flip, that it was probably the real deal, and that wasn't just a guess. That was based on probabilities. So we have a market that is triple aligned. It's in expansion, and it's getting aggressive, and I'm sure everybody's starting to sell out, and it's leaving only the stragglers to ride up the core, to ride the bulk. It's the Warren Buffetts of the world that hang on, and they make a lot more money than everyone else because he just doesn't trade everything in and out. And I would advise doing the same thing. That's what the whole evolution of the trade is all about. If you want to learn more about that, and go to your matrix or go back to the website and find a description of the evolution of the trade. And that's basically how the world's smarter money tends to invest. There's a little bit of trading inside of it, but you basically follow primary trends. And that's a different ball game. That's defined in terms of months rather than days and minutes, which everyone seems to have the shortest time frame possible. And they just talk themselves out of positions and talk themselves out of profits. I would say that there's reversals that hold back the dollar, which the computer can't find any here. It's above a lot of the other stuff. I'm sure you can go back longer term. You can probably take a look in the reversal tab for the dollar, and we go in here, and you can do this anytime you want. There's nothing in the weekly. There's some in the monthly, and you can see where it's going to slow down. It goes back and start to use some of these reversals. There's nothing in the weekly, which is shorter term, but these reversals will come into play. It will slow the market down. You can see a couple of them at 30.4. Then we get a little higher. Once you probably get through the 30 handle, which is, you can eyeball it, it's not much until about 31, and that's when things really get ugly. And you say, well, how close are we to getting above? And I go back to this tab. You're not that far from losing the 30 handle. Once you get above that, this is really, it could be a short pause, and then it could take off again, but you have to identify where the air pockets exist. That's something you can do when you subscribe and download to the matrix itself. You don't have to listen to me talk about this stuff too much. I think what you have to be, the whole take-home point of this update and this review here is to encourage people to get involved with the report, because it's serious business. But it also is just to say, take it easy on what you think you know. The computer studies the dollar through 1985. So I say be careful, because this will get out of hand, because the computer index, this is also the dollar, based on different measures than the US dollar index, which really can only be constructed back a certain amount of time before you lose the major currencies or trading partners currencies, because they disappear and rematerialize so frequently it's impossible to construct the index back in time. But if you look back, you can really see some of it back. And the problem is the dollar was locked into the 30s by gold and silver. So you can see it back to about 1930, where it does fluctuate, even when it's supposed to be backed. It broke away, and then it's free floating. The whole point of this is to say, don't underestimate what this can do, and don't underestimate what these cycles are telling you, and overestimate that the computer should be worried because the look back period is only 1985. And we've been using dollars for a long, long time in the United States, and it's one of the few currencies that hasn't been retired in the world. They often come apart, come alive, and then they're destroyed within a short period of time. What destroys them is debt and irresponsibility, and that's never seems to go away, no matter which generation you talk about. You only have a certain amount of time before the empire dies, and the understanding here. This is one of the reasons why we're going to keep the dollar index and dollar report going as long as we can. You have to talk about the transition of the empire that's taken place in the United States. If you have any comments or questions, let us know. I encourage you to get part and join, participate, and be a part of the dollar report that's out there, a dollar index report. We'll leave the links up. This is going to get serious, and this is going to get difficult. And unless you think you got it all straightened out in terms of the trading, we're going to talk a lot more about things that are not trading related. Because I'm telling you, if you think you've read enough history books or studied enough on anything, social media or anywhere, YouTube, that gives you an idea of what's to come, probably not. You have to go deep into the archives to understand what financial history is all about. And when an empire shifts, it gets much, much, much more difficult than even what we're seeing right now. Thanks for watching, and we'll talk to you guys real soon.